Good morning from London. I'm Guy Johnson. I'm alongside Kriti Gupta. We're an hour away from the opening trade. So what do you need to know this Friday morning? Kamala Harris accepts the Democratic presidential nomination in Chicago and vows to fight for the middle class. The yen climbs as a hawkish BOJ governor signals that he won't back off from hiking rates. This as Japanese inflation for July comes in hotter than anticipated. And the market's focus now turns, of course, to Jackson Hole and Fed Chair Jay Powell's key speech. Bloomberg's special coverage starts at 2 p.m. London time. Kriti.
In the meantime, a quick check on these markets. You are seeing green on the screen, but by a very different margin. Euro Stoxx 50 futures are flat at the moment. FTSE 100 is where the outperformance is, higher by 0.5%. We're going to dive into the details in just a moment. But we were talking about that currency story. Cable crossing 131, euro dollar hovering at 111.24. The countdown to the opening trade starts right now.
Well, instead of a Trump tax hike, we will pass a middle-class tax cut that will benefit more than 100 million Americans.
Kamala Harris wrapping up the DNC in Chicago, formally accepting the Democratic presidential nomination a few hours ago. Get my times a little bit wrong there. What I thought was interesting, Kriti, she didn't ramble. She spoke for 40 minutes. It was a fairly tight speech. Didn't give a lot on policy, but clearly she sees the middle class as being her key target. She sees independence as her key target. This was a speech designed to appeal to the base, but also reach out a little bit into kind of no man's land in terms of the political spectrum.
It absolutely was. But look, she hit a lot of the hot button issues. You talked about the economy there. She talked about immigration. She highlighted kind of her own background in her own words, which I think is the first time that's ever happened post being on the ticket with Biden as well. She hit Ukraine. She even hit Gaza. And that was the big kind of piece that we were keeping an eye on. The one thing she didn't mention was gun control. But besides that, hit every other hot top button issue they're talking about, from immigration to foreign policy to reproductive rights. We'll just see if the American electorate actually bites. For more, let's bring in Bloomberg's Vonnie Quinn, who, of course, been monitoring this for us out of Washington, D.C. Vonnie, your key takeaways from what Harris said to us.
Yeah, as you mentioned, guys, she was introducing herself to the American electorate as essentially Kamala Harris for the people, which is the moniker she would have used an identifier daily as a public prosecutor her entire career. She had one client, and that was the American public. So in that 40 minutes that Guy mentioned, she essentially made the argument for why she should serve the American public as president, why she should be commander-in-chief. She did mention prioritizing economic opportunity for the middle classes, also some of those hot-button issues, protecting reproductive rights, voting rights, civil rights. She mentioned being pro-business as well, and she didn't shy away from those areas that are particularly fragile in battleground states. She said she would be strong on the border and immigration, and she developed a whole section to talk about the Israel-Hamas war when she was talking about America's role in the world and how she would be an amazing commander-in-chief. So essentially, as Guy said, this was an effort to reach out to people of all spectrums, all kinds of persuasions out there, not least the Democrats, but everybody else under a big tent as well. And to that end, she said that she would put behind us the bitterness, criticism and divisive battles of the past. Now, she did address her opponent, but she kept it quite sober. She said in many ways Donald Trump is an unserious man, but the consequences of putting him back in the House are extremely serious.
Bloomberg's Vonnie Quinn there joining us this morning to give us kind of the wrap of what we saw. And I think that last point that Vonnie made is really crucial. She's still kind of portraying herself as the anti-Trump candidate, which is really how the criticism of Joe Biden came about, that people didn't vote for Joe Biden. They voted not for President Trump. And I think that's a crucial point here.
It is. The polling's working for her, though, at this point in time. But the question is the honeymoon, is this the high mark for the honeymoon?
Yeah.
She's come into the race late. She's had a big surge. She's raised a lot of money. Is this as good as it gets? Obama was making it clear, yes, the fight is on now, and it's going to be a big, tight race, and it's going to be difficult to win. And I just wonder whether this is as good as it gets. It was a great convention. They delivered it nicely, a lot of razzmatazz. It had a positive message of unity. But what now happens? Because it's going to get hard from here.
Well, the razzmatazz, as you phrase it, is going to phase out. And I think this is crucial because the next kind of key date that we're looking at now is September 10th. And that's when we're going to see the debate between former President Trump and Kamala Harris. I believe ABC News now moderating that. And she really has to kind of come up and show that she can take on a tough personality, because that's also one of her criticisms. On a foreign policy record for our international audience, she's never been to Beijing. She hasn't had a major role in those immigration talks or the border talks for the South. All we've really heard from her is the fiscal, which is something that we're going to have to kind of bring into the conversation when we talk about the monetary.
Today's a key day. What kind of an economy is the next president of the United States going to inherit? And I think today is a key day in that assessment, in understanding the assessment of what that is going to look like. Jackson Hole is upon us. The Powell speech is upon us. We get it, at 3 p.m. today, UK time. It is a critical moment. Is it going to deliver in terms of expectations, I think, is one key point. If you just think about the kind of symmetry of risk around all of this, it is unlikely that Powell is going to sound more hawkish. He may sound neutral. Is the risk that he sounds more dovish, i.e. he doesn't take 50 off the table explicitly, maybe even hints at 50 as being a possibility still post that payroll number at the beginning of September? I'm trying to understand kind of where the risk lies today.
Well, I kind of want to know what the reasoning for cutting actually is here. Is it normalization? And if it's normalization, it brings up questions of what the neutral rate is. What are they paying attention to? Is it still the R-star and employment conversation? The other piece that we're going to be talking about here is there actually a slowdown in the works? We know that there is in the data. Does slowdown equal recession? I thought Neil Dutta over at Renaissance Macro said it perfectly, which is that not every slowdown is a recession, but every recession starts with a slowdown. And I think that's the line that Jay Powell has to walk.
And you're at a really fine point at this point. Do we see the labour market deteriorating rapidly? Is it an acceleration? Because people are talking about rate cuts coming through gradually. That feels linear. But actually, generally what happens at the beginning of a recession is that you get a kind of non-linear pickup in terms of the inflated, in terms of what happens with the unemployment rate. And that's really interesting. So do you front load? And I think that's a key question that the Fed needs to address right now. Let's talk about inflation from a different angle. We are obviously going to be covering this speech extensively. We've got that coming up. Jerome Powell's speech, Jackson Hole. We've got a lot of wraparound coverage coming up around it as well. So we are, in terms of the build-up, going to be sitting down with the Atlanta, Philadelphia and Chicago Fed's presidents. We've got the former Kansas City Fed president, Esther George, joining us as well. So that basically builds us up into this amazing coverage we've got coming up from the surveillance team, live from Jackson Hole. Starts at 2 p.m. UK time. The speech is, I think, at circa 3 p.m. And then they'll have some sort of post-game analysis after that. But some key speakers coming up. And we've got some great coverage. I think that's kind of the big takeaway from today. So tune into that a little bit later on. I was getting a little ahead of myself just a moment ago. We need to talk about inflation from a different angle, and that is what is happening in Japan, because we've also had the BOJ this morning. Hawkish, I think, is the way that I would characterise Ueda's comments a little bit earlier on. Mildly hawkish, a little bit cautious, I felt, talking about the fact that he's not going to take rate hikes off the table. The yen has responded, but it wasn't a full-throated endorsement of the need to tighten policy in a significant way. And I think he's playing it very carefully at this point in time, particularly given the proximity to Jackson Hole.
Yeah, I think this is fascinating in terms of the market reaction here, because you're seeing strength off of it, of course, on that kind of hawkish signaling. You're seeing strength in the yen. To me, I think what's crucial is the global ramifications of this. This is not the panic or the unwind necessarily that we saw of a couple of weeks ago, but you are continuing to see that carry trade just get kind of smashed as Governor Ueda makes those signalings. And to me, I'm focusing on the other side of the world, which is, of course, the Mexican peso. And the reason I do that is because the more and more we see this hawkish standpoint from Governor Ueda addressing things like import prices, the labor story, the wage story over in Japan as well, not to mention trade as a big part of it. Risk-taking is, for the rest, for an international audience, is really what's on the line. So that's going to be a big part of the conversation that we have throughout the rest of the program. What are the market implications from Jay Powell over at Jackson Hole to the other central bankers around the world, including Governor Ueda? Just how hawkish can he be when the Japanese economy, still at its core, is fairly weak? Let's tell you what else we've got coming up on the show today. Several other markets voices going to be weighing in on that debate. William Sells from HSBC and Prime Bridge's Hanny Reda will be joining us to talk about markets, just the very topics that we were just talking about. Plus, again, the FX conversation I am very, very excited about. Nomura's Yusuke Mayari will be joining us. She'll be breaking down that Governor Ueda comment and as well talking about the U.S. elections, how that all shows up with Roberta Har from Maastricht University.
I just want to flag that the outgoing and incoming Nestle CEOs are on a call right now. They are speaking. We'll get some headlines. We'll bring those headlines to you after the surprise announcement last night. Maybe not a surprise that Mr. Schneider is going to be stepping down from that Swiss institution. We'll come back to that story a little bit later on. I want to bring you up to speed with some of the other stories you need to know this morning. The bodies of British tech tycoon Mike Lynch and Morgan Stanley's international chair Jonathan Bloomer are amongst 5 now retrieved from the wreckage of a luxury yacht that sank off the coast of Sicily Monday. Italian authorities are continuing to investigate exactly how the super yacht sank. Apple says it is making changes to comply with the European Commission's Digital Markets Act. These include changes to browser choice screens, default apps and app deletion capabilities for iOS and iPad OS. And they will come into force, we think, by the end of the year. And France's Emmanuel Macron will begin negotiations with party leaders to help find a new prime minister for France. This nearly 6 weeks after he lost control of Parliament. His party lost control of Parliament in that snap election. The French leader will start talks at the Elysée today with the left-wing New Popular Front, which won the largest number of seats, but still fell short of a majority. This is the start of a process, Kriti, and I think it's going to be really interesting to watch how this works out. Are we basically in a position where we're really just building up to another election because the situation is so inconclusive in France right now in terms of where power lies that actually probably another election is going to be required to resolve that. But it looks as if what Macron's trying to achieve here is finding a prime minister that can survive a no-confidence vote in Parliament, a Parliament that is very much fragmented at the moment, and that is the big risk, I think.
Well, how do the markets interpret that risk? Because that's a risk that's kind of been hanging over these markets for a very long time. I'm looking at the spread, of course, between the French 10-year and the German 10-year as well. We're at 71.4. We'll call it 72 basis points there. But I think we had a guest on yesterday out of ING, Carsten Brzeski, saying that spread could go up as high as 90 going into next month.
It could. And you wonder how long this risk lasts for, how long the overhang is going to be there for. If we are assuming that France ultimately is going to need another election, and that it's going to take I think it takes a year to get there.
Yeah.
We've basically got that overhang of that electoral risk. And remember, you've still got Marine Le Pen sitting there out of this process, waiting to see what happens, biding her time in anticipation maybe of that election coming up. That's an overhang that is not going to go away for France.
And we should mention that, and I'm glad you brought up Marine Le Pen as well, is because in terms of her kind of campaign, her rhetoric, she's already been tweaking her policy. She's been pulling back on some of that kind of more anti-immigration, more far-right stance in order to court some of the votes. And remember, Macron's centrist policy, even in the first time he got elected, was really spurred on by the left. If you start to see the left look unorganized, look like they're going to put the fiscal deficit into more peril, make the markets freak out, not just in the bond market, but in the stock market as well. That plays right into Marine Le Pen's hands. You
do wonder whether the left is going to be looking at what happened here in the UK and how the Labour Party, now in office, managed to deliver the process of getting rid of Jeremy Corbyn, a far-left leader, from its ranks, and change the tone of the conversation. And I'm wondering whether or not the left is looking at that and trying to figure out how it could mainly manage the same thing over in France. We'll come back to this story a little bit later on, get you updated on what is happening. Let's talk a little bit about what is coming out of Nestle right now. We've got a new CEO coming into office. We've seen Schneider leaving. You've got Freixe taking over. He's an insider. What we've basically got is a call taking place right now. Schneider saying leaving Nestle is not a decision I took lightly. The new Nestle CEO is now speaking, planning higher investment in brands and innovation, talking about a focus being on sustainable growth through market gains. Nestle must be strong on cost savings and on productivity. And the reason this is important is a lot of people don't believe in the market some of the current estimates that Nestle has, and they're wondering whether a new CEO coming in after such a tough year will ultimately kind of kitchen sink the numbers. But if you're an internal candidate, is it harder to do that? And I think that's the question a lot of analysts will be asking this morning. Yeah, it's going to be an interesting one, especially when we talk about whether or not Nestle falls into that consumer basket that we're putting, say, Diageo, Unilever with it as well, where we're either going to see the consumer actually be able to take on more price increases as well. All part of the conversation. Coming up, we're going to dive into what that new CEO actually looks like, who inherits some of those challenges that we just talked about, what that future of Nestle broadly looks like, plus BMW overtaking Tesla for EV sales in Europe for the very first time. Is Elon Musk's company losing
its grip on the sector. But up next, we go right back to the markets. It's all about Jerome Powell in Jackson Hole today. What kind of tone does he set for the Federal Reserve and arguably the rest of the world? If you have any questions of your own for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. Stick with us. This is Bloomberg.
Today, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Stay tuned for a special episode of Surveillance today at 9 a.m. Bloomberg, context changes everything.
All Wall Street wants to know, how far will he go? Investors would love a rate cut pledge from Chairman Powell. That's not likely. He's also unlikely to say how far the Fed will cut or what their next steps will be. Instead, expect acknowledgement that the Fed is close to changing rates as long as the incoming financial data meets forecasts. He still has to get some of his colleagues on board.
This mandate on the inflation side's really important. I think we seem to be getting some really good movement that direction. But before we act, at least before I act or recommend acting, I think we need to see a little bit more.
Kansas City Schmidt can't define how much a little bit might be. But for Wall Street, Powell just raising the subject may be enough. There's also interest in how much he might talk about the Fed's framework review, which the central bank begins to undertake this fall. The transmission of monetary policy is the topic of this year's symposium. Michael McKee, Bloomberg, Jackson Hole, Wyoming.
What a lovely shot. Only one thing missing, Mike's hat. Maybe next year. Mike McKee at Jackson Hole. We've got some great coverage coming up. We've got some special coverage coming up a little bit later on. Starts at 2 p.m. London time. We're going to build you up to that, though, right now. William Sells, Global CIO for Private Banking and Wealth at HSBC, joins us around the table. How critical an event is this for markets? We built it up as being this critical event. Is it actually going to deliver upon that? How crucial a moment is this on our understanding of what is happening with the U.S. economy?
I think we've had the big swings over the last 2 weeks, so the swings will be smaller, hopefully. I do think that you always need to look at a whole series of data, when we're looking at the labor markets, and also the numbers yesterday, for example. You need to put them into context of other things around hiring, around, the number of redundancies, all of those kind of things. And I do think that is showing a slowing of the labor market, the slowing of the U.S. economy, but not a collapse. So therefore, I think what is going to be announced in Jackson Hole, or the tone that they're going to want to take, is that, yes, in line with what the minutes of the Fed meeting are telling us, that they will likely cut, but only by 25 basis points.
Why is that? I was trying to understand and think about the risk of kind of how this is going to play out. He's not going to sound hawkish. That's highly unlikely. We'll leave that to Ueda. And he might sound neutral, as you suggest, and kind of talk about maybe 25. That's what the market's anticipating. That's what we think is going to come through in September. Therefore, the risk has got to be that actually he sounds a little bit more dovish. Now, Powell has a history of sounding a little bit more dovish, maybe than the rest of the committee, which I think is interesting in itself. Is there a danger that he is looking at the labour market data and saying, I don't want this to take off. I don't want the unemployment problem to become a bigger problem. I don't want this kind of early stage acceleration that you normally see. Once it takes off and takes off quite quickly. Therefore, actually, maybe I'm leaning into 50. We want a front load to deal with that issue, that we don't get this big takeoff in unemployment. And maybe that's what he signals.
But I think, as you were saying just earlier on the news there, is that, there's still a few members that are not yet convinced of a cut. So, to then jump and imply that there's going to be a 50 basis point cut, I think that's a lot. I'm not saying he's going to imply. I'm just saying he's not going to take it off the table. It's still we could do 50, we could do 25. Correct. I mean, I don't think he will say it's off the table either. But because he can't be that clear. Ultimately, it is also a consensus building exercise, and it's a committee. But I do, for example, in particular, when you look at what companies are telling us, U.S. companies are still quite optimistic. I mean, they're making record profits. Their margins are very high levels. And although you see more dispersion in companies sort of, doing well and other companies doing more poorly, it is not reflective of a recession. So therefore, I think he's going to want to avoid sounding panicky about the U.S. economy and implying a 50 basis point cut.
What kind of lag are we looking at here? Does the 12 to 18-month lag still apply?
It should apply in both directions, right? I mean, when they were hiking, we were saying that, what is the lag? Because it doesn't feed through into the mortgages until a very long time, because you have those 30-year mortgages, and also on the corporate side, you have a big lag. So there is indeed that problem of the lag. So therefore, I do think that they need to start, and we also have the first interest rate cut in September. But it will feed through with indeed the lag.
And arguably, I think Austin Goolsbee made this point that there's the hike, the effect of the hike is still to come and to show up in the economy, though. But I'm curious, though, if there is that question of the lag, how does that affect the debate of what happens after September? Are we perhaps setting the precedent for pause cut or continuous cuts? What does that pattern look like going into not only election, but a budget talk in January of 2025? Yeah,
so I think most economists, and we as well, we have a relatively gradual path. And, it's very hard to say, we'll have a cut, then, a pause, then a cut as well. Sort of, most forecasts are relatively smooth. There is, of course, the question after the election, how accommodative is the fiscal stance going to be? Both candidates are actually quite accommodative from a fiscal perspective. So if that has, again, question of the lag, a quick effect on economic growth through confidence, for example, or through investment spending, in incentives, then it could be that the Fed actually doesn't cut that much. We now have in the market, basically markets pricing in cash rates coming all the way down to 3%. That is a risk for the markets. If indeed, the fiscal stimulus is accommodative, and indeed they need to stop at some point.
In the more near term, does a 25 basis point cut equal buy stocks?
We buy stocks mainly on the back of that earnings, optimism that is there. I think the cuts, are priced in even more actually than we expect. We only expect three cuts this year of 25 basis points. So that is not going to drive a multiple expansion. You need to look for those companies that can deliver on that earnings growth. And again, bifurcation. Very much looking at those with the margin power. Those are the ones that have the strong positions in their sector. But it is across sectors. So not just technology, but across sectors. And luckily, because, you see that gradual uptake in analyst expectations outside of technology as well, you can broaden that sector exposure.
Is Japan still the hedge?
Japan is for us, is still a positive story, mostly on that corporate governance, on people starting to put more money to work because cash is, with higher inflation, not that profitable. But indeed, it is an uncorrelated market. Sometimes quite painfully so. As we saw, a few weeks ago. But it is indeed, somewhat uncorrelated. And people in Asia, in particular, when we talk to our Asian clients, are actively looking for diversification within Asia, obviously, because China is flatlining in terms of economic growth.
It's a fascinating one, especially when we talk about kind of the carry unwind and whether or not it actually shows up in portfolios. We'll have to leave that conversation for another time. Willem Sells, Global CIO for Private Banking and Wealth over at HSBC, joining us to talk about a little bit of the central banking story around the world. Guy, it's a fascinating one then. We're waiting for that carry trade to show up, and yet some are still very positive on Japan.
People are still positive on Japan. It's figuring out Japan, I think, is really difficult right now in terms of where Ueda takes us. Clearly being cautious, clearly rate hikes are coming. How quickly they come, I think, is an open question. You've also got this whole idea that we've already seen the bulk of the carry trade unwind. I think it was JP Morgan that said that. I find that really hard to believe. Things that build up over years tend to not unwind quite that quickly. Anyway, we'll be back with the BOJ in just a moment. We'll get you some key analysis on what is happening there. This is Bloomberg.
A single summertime decision by Japan's central bank ended up triggering a panic. And at the heart of all this, the Japanese yen and a massive global unwinding of the so-called carry trade. So what are carry trades, and why are they contributing to volatility in financial markets? In short, they're a popular strategy of borrowing currency at a very low rate of interest, the yen in this case, and investing it in something that pays you a higher rate. Now, you might make a return from that trade because it's kind of like investing free money. But
if things go incredibly wrong, you'll lose money both on the stock side, and then you have to pay back your credit company as well.
Which is exactly what happened in August.
And it all culminated in the Great Unwind, as we call it today. The yen, which everyone had been selling to fund this carry trade, surged in value. All of a sudden, at the same time, people started selling everything that they had in order to cover those margin calls. They had to pay for their losses somehow.
So what we've seen during this market crash basically is that what Japan does, what the Bank of Japan does, can have major implications for the rest of the world.
Of course, subscribers can see that report and, of course, the full documentary on the terminal or at Bloomberg.com. Of course, it'll be up on the Bloomberg Originals YouTube channel later as well. It's a fascinating story, of course, as we talk about what that carry unwind looked like, just how far it actually has to go, especially in the light some of the comments we heard from BOJ Governor Kazuo Ueda telling Japanese lawmakers that the central bank is still on a path towards higher interest rates. That's if inflation and economic data continue to match their forecasts.
If we are unable to confirm a rising certainty that the economy and prices will stay in line with forecasts, then there's no change to our stance and we'll continue to adjust the degree of easing.
Joining us now is Yusuke Mayari, FX strategist over at Nomura. I tried my best with your name. You're going to have to correct me if you can. Walk us through just how far this carry trade unwind has to go. There seems to be some mixed opinions on that.
Yeah, so the price action of the dollar yen that we saw from mid-July to early August was that obviously the massive unwind of the carry trade position. But if you see the public data available, like CFTC data, then most of the carry trade or carry position has likely to be unwound. So going forward, it's not just about the carry trade unwinding, but like dollar yen's macro fundamentals like policy divergence, FX policy, those are going to be important to forecast the dollar yen.
So let me argue the opposite then, in that perhaps not all of it is unwound. And I think an example of that might be just the pain you're seeing in the Mexican peso right now. Give us some forecasts here. Give us some numbers. If we're seeing strength in the Japanese yen this morning, we're looking at a 145 handle, 145.62 right now. How far does that go? Give us a number.
So at the moment, we're thinking 143 is a target for the end of September 2024, which is for the next 4 weeks. We're not expecting a massive move. As I said, most of the position has likely unwound, especially on the yen side. So in this regard, we're expecting the Fed to cut in September meeting, and as well as the BOJ to stay on hold for September. And the next hike is going to be likely in December. So in this regard, we're expecting a gradually decline in the dollar yen rather than like a massive decline that we saw a month ago.
What did you make of the testimony today? I'm kind of characterizing it as being hawkish, i.e., it was a little bit hawkish. I felt he was quite cautious. He's clearly recognizing that markets are still fragile, and he's got Jackson Hole kind of on his doorstep.
Yeah, so the key message from him today was that his policy stance is consistent to Deputy Governor Ueda that he said 2 weeks ago, is that the BOJ's basic thinking on monetary policy hasn't changed. It's the input variable that goes into the policy function, meaning the market stability, that the BOJ now needs to take into account. So if the market is unstable, then the BOJ won't move. But if it becomes stable and inflation and economic activity develops in line with the bank's projection, then it will hike. And it's likely that the BOJ will hike to the neutral level. It's really arguable that where the neutral level is, but it looks at, from BOJ's estimate, it's from between 1% to 2.5%. So
that's a pretty wide band.
It is. But it's difficult to estimate the neutral these days, right? Like, most of the central bankers don't likely to talk about neutral, but BOJ has given some clues about it, and it looks like from 1% to 2.5% is a nominal neutral rate level zone. So it looks like the BOJ has an implicit goal of going to 1%, but it's not autopilot, it's not auto set. Yeah. So, but if the BOJ has a chance to do it, then the BOJ can decide when to hike, and I think it will gradually go to 1% for the policy rate.
What is that neutral rate or even the case for hikes dependent on here? Because we're still talking about a fairly weak Japanese economy. Are we looking at what's the sensitivity here? Is it to oil prices spikes? Is it to what's going on with the Federal Reserve? Is it to wage negotiations? What What is the kind of equivalent or Japanese equivalent to the payrolls conversation in the States?
Yeah, so it's difficult to say like one thing, but obviously wage inflation is important, and also the services inflation is important in Japan. So if you look at the past history, the service inflation or domestic produced inflation has been really subdued over the past 20 years, 25 years, but this has been coming up after the 2 years of strong Shinto negotiation results. So if this continues going higher, then the BOJ has more chance to hike its policy rate going forward. So service inflation, I would say.
So now fold in the fiscal here. If there is a prospect of a snap election, I think local media reporting that somewhere in late autumn, which is handy because there's plenty of prospects of other snap elections around the world before the U.S. election as well. How does that feed into BOJ thinking?
Yeah, that's a good point. So if the policy events kicks in, it will make the BOJ's policy decision less flexible. If you look at the past cases, the BOJ hasn't changed its policy around the main election periods. So we do have LDP leadership election in September. That's fixed. And around that, BOJ may be difficult to move. And if you have a snap election, as you say, in like late August or late October or early November, then the BOJ may be difficult to move in that period as well. So the BOJ's rate hike could be postponed to December. And our view is that next hike will be to 0.5% in December 2024.
And the politicians are behind a rate hike? That seems to be the message at the moment.
It's quite mixed. It's quite mixed. So one politician saying that BOJ should continue easing, whereas others are open-minded about policy normalization. Right. And before the July meeting, there were several key LDP politicians who were open-minded and were pro-policy normalization, including current Prime Minister Kishida. And if you listen to the testimony today, the opposition parties were criticizing the BOJ governor that the BOJ's policy normalization was a bit late than what it had to be. So there are like mixed views on the policy among the politicians.
Is Japan going to be a source of volatility for global markets? Is it going to continue to be a source of global markets? Clearly, the BOJ is recognizing that risk, but can it avoid it?
It is likely to be a volatility factor because the BOJ will likely to hike going forward, whereas other central banks are entering the rate cutting cycle. So the BOJ is completely doing the opposite thing. So it could create a volatility. But what we need to understand is that the BOJ is not like hiking to a restrictive level. BOJ's current policy is like pretty accommodative and bring it to neutral. So I'm not expecting like the volatility to spike that we saw in July, but it will keep the volatility elevated, which will make the carry trade less attractive going forward.
What's the bar for intervention here from the BOJ or from the Ministry of Finance?
At the moment, I mean, dollar-yen's around 145, 146, so there's no strong urgency of intervening. Yeah. But what's worth to highlight that the Ministry of Finance people came out when dollar-yen was massively declining from 162 to 142. Yeah. So if that pace goes on, then the Ministry of Finance people may need to come out to at least verbally intervene. But at this moment, the level and the pace, it's all fine, not a strong urgency of intervention.
But isn't that a function largely of not necessarily what's going on with the BOJ, but largely what's going on with the Federal Reserve and the fact that we are seeing, and this has been a topic of conversation on the show, that more cuts are being priced into this market than are largely expected by the end of the year. Does this feel more that the BOJ is at the whim of the Fed at the end of the day? If the Fed only goes 25 or indicates perhaps even today that there would be a more hawkish tone, for example, or a more resilient tone coming out of the States, is that the BOJ's worst nightmare?
Yeah, in terms of the currency, maybe, yes, because, as you said, like the market's quite excessively pricing the Fed's rate cut going forward. But we kind of know that Fed is entering the rate cutting cycle, and the policy rate divergence, the differential between Japan and U.S. is going to narrow, right? So there's not much attractiveness of doing more carry trades at this point. So in this regard, I think the MOF and the BOJ won't be that concerning about the currency going forward.
Is this finally the end of easy money? I appreciate we're talking about the Fed maybe cutting rates, but it's still going to be cutting down to neutral, i.e. the implication is that we're still in restrictive territory. We've had QT coming through from major central banks around the world. The BOJ is the one that stands out kind of on its own as continuing to deliver significant amounts of liquidity into the global system. Is this now the moment where actually easy money is over, that the zero interest rate policy is done globally? What impact do you think the BOJ has actually had in the last 18 months, 2 years, in terms of continuing to drive that liquidity story?
Yeah, in terms of the liquidity story, the BOJ is trying to normalize it at least. So since Governor Ueda became the governor, what he tried to do is to normalize the policy, to not to do too much that the BOJ kind of did over the past 10 years or so. So the liquidity, in the sense of the liquidity, the BOJ is trying to reduce it. But as we discussed, it's not going to restrictive. It's not like tighten the monetary policy to fight the economy. It's just to bring it to neutral and to normal. So basically, the liquidity is going to reduce going forward.
Yuri, thank you very much indeed. Great to see you. FX strategist Nomura. Let's talk about the data we are getting, or the commentary we're getting through from Nestle right now. So Schneider out. Freixe is in, new CEO, internal candidates, going to be taking over in a few months' time. You've basically got a situation where the market is trying to understand whether or not we're going to see some of the big targets changing. He's saying now that he's going to come back to the profitability target, which is the Capital Markets Day. Actually need to get a date for that Capital Markets Day. But he's also indicating that gaining sort of market share in core areas, not in all areas, remains the priority, is the priority. But we've got new leadership.
Yeah.
Nobody knows whether these targets are going to hold up. It's been a really tough year for Schneider. He's now stepping out. Do the targets change? Do we get a kitchen sinking of those targets? What do the new targets look like? I think there's some big open questions around Nestle right now.
Well, it also feels like that is a narrative driven largely by Wall Street, because this is, at the end of the day, the counter to that is he's an internal hire. So the targets may not actually change at all when it comes to that, especially given the fact that this isn't a vacuum. They've had an entire year of missing some of their numbers.
Yeah, they have. It's been a really tough year, which is in some ways why Schneider, maybe you could argue, has stepped aside. I've got a date for that. Tuesday, the 19th of November. Is when we're going to see the Capital Markets Day. So that is when that's when maybe we start to get some of these big announcements, and that'll be, this is such a major stock for Europe. This is such a key stock for Europe.
In your sensational six?
It is, of course it's in my sensational six.
There it is.
Anyway, so a big day in Vevey, and we're watching out for that date coming up a little bit later on down near Geneva. I think that's where it's going to be held. 19th of November in Vevey, Switzerland, a key date coming up for Nestle. So we'll look at that new leadership, figure out exactly what impact that could have on the stock this morning.
Yeah, and I should just mention that you still have plenty of street highs on your analyst recommendations, as high as 114 Swiss francs. The stock last close is about 89 francs. We're going to dive into that and your other stocks to watch ahead of the open. You don't want to miss this story. We'll keep you updated. Stick with us. This is Bloomberg.
This mandate on the inflation side is really important. I think we seem to be getting some really good movement that direction. But before we act, at least before I act or recommend acting, I think we need to see a little bit more.
Kansas City Fed President Jeffrey Schmidt, speaking, of course, to Bloomberg's Mike McKee at Jackson Hole. Joining us now, Paul Dobson, Bloomberg's executive editor for Asian markets. Paul, are you excited? Are you ready? Is Jackson Hole going to be a big market-moving event?
Well, if you're in Singapore like I am, it's not going to be until 10 p.m, so you've got to be excited if you're going to be staying up to watch it. I think that Jerome Powell, on the other hand, will probably try to be as gentle as he can in terms of the impact that he's going to have on the market. Probably, from everything that we've heard from the other Fed speakers, the message is going to be that the Fed will be starting soon with the cuts, but it's only going to be going gradually. We're not going to get that swift, sharp move that maybe some have been pricing in until quite recently. So, what will that do for market pricing? It could still stoke some volatility. We saw it a bit yesterday in US markets. We heard from the likes of Mohamed El-Arian saying the pace of cuts that's priced into the market is too great. And you could probably see that. If you think that the Fed is only going to do 25 basis points per meeting, then the market is already pricing 100 for this year, which is too much. So we could still see some of that come out of the short end of the bonds market, and that may in turn lend a little bit of support to the dollar as well. But probably if that's mixed with a kind of message of gradual cuts for some time, then that can assuage equity investors and keep everything else pretty much intact.
Paul, dollar weakness has been quite the theme over the last, well, I want to say couple of days. The fact that we're looking at a 131 handle on cable to me is surprising this morning. 111 on euro dollar. How long does that last?
I think if the Fed is going to be on a prolonged cutting cycle from here, then probably the dollar does start to lose some of the support that it has had over the past few years, right? And so in that case, you could see, all things being equal, continuing pressure on the dollar, and depending on the pace of cuts in other markets and the strengths of their economies, maybe some relative strength coming through still from the pound, the euro. And if you look over here in Asia, you know, the Asian currencies have been on a real tear against the dollar for the last 6 or 8 weeks, still really enjoying those gains. And it feels like they have momentum behind them too. So some of that, those flows coming out of the US may be moving into higher yielding emerging markets, people thinking that that could be the next place to park their money.
What did you make of Ueda's comments? I felt he was hawkish, not that hawkish, a little bit cautious. I understand, given the politics in Japan, I understand that Jackson Hole is coming around pretty quickly as well. What did you make of what he had to say, and what clue should we take from it?
Yeah, I think that having pulled off a rate hike, and, you know, managed to reduce the bond buying as well in the last BOJ meeting, he doesn't want to step back right now. He wants to show that the BOJ is still committed to raising interest rates, again, going gradually like the Fed, not going aggressively. I think that's the message that he wanted to get across to markets and was quite successful. And secretly, I think that he's probably quite happy with what happened in the, maybe not the extreme volatility that happened immediately after the BOJ's last meeting, but in the in the longer term, you know, he's blown some froth off the equities market and out of the yen carry trade, and everything is returning to normal again.
All right, Bloomberg Executive Editor for Asia Markets, Paul Dobson, we thank you so much. Let's go from the macro to the micro and get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So we are expecting to see some weakness in Nestle shares today amid that unexpected change in the CEO, the boss of the Latin America region, coming in and replacing Schneider at Nestle. Now, this stock in the US, the ADRs had their worst day in 4 years following the news of that change. We can see it down 5%, the biggest decline since the outbreak of the COVID pandemic. Now, in terms of what analysts are saying, RBC analysts writing that they expect the new CEO may consider abandoning the recent guidance given on margins and also sales as well. They describe it as constraining and potentially might look to revisit that. Meanwhile, Jefferies saying that they've recently heard some investors grumbling about the current performance of the share price, and therefore they're not that actually surprised by this news. But they don't expect the guidance to be scrapped. They think they might stick with it. But if we look at this chart here, we can see Nestle clearly underperforming the stock's food and beverage index, the other index that contains rivals like Unilever. Now we can see a pretty decent underperformance in that stock in terms of that divergence. Concerns around rising costs and also customers trading down in terms of the products as well. Been a big weight on that stock. But as I say, potentially going to be a negative one this morning. Then we've got a bit of M&A over in Sweden. Now this is in the medical transportation sector. Now Getinge is buying Paragonix Technologies, giving me a bit of a tricky one to pronounce this morning. Now, this is actually in organ transplant transportation. It's probably not something we want to talk about this early in the morning, but it is quite a big deal. It's around $477 million. And for that reason, Morgan Stanley reckons that we will see a negative share price reaction on Getinge in Stockholm this morning. It's quite a high multiple for this company. And this is a firm that's actually had some recent profit warnings. Part of that was due to some of their heart drugs actually failing at some tests, so that could be a negative one today. Finally, another one, potentially a third dropper today, is Dino Polska. This is over in Poland, one of the country's largest supermarkets, giving some really negative results after the close of trading yesterday, missing on EBIT margins and on sales. And we've got a comment here out of Citigroup saying the market reaction is very likely to be negative, as this is the first time the company has reported a decline in those key numbers since it went public around 7 years ago. And it's another one we can see been pretty weak over the past year. So in terms of stocks to watch, 3 stocks all expected potentially weak this morning.
Joe Easton, thank you very much indeed. Setting us up for the session ahead, which kind of feels like it's going to be cautious. We've dealt with the BOJ, but we've still got Powell to come, Kriti. And I think it's undecided as to what exactly he is going to say. The risk feels like he leans dovish, but he's been very clear up until now that he wants to be data dependent. So that's a factor. The BOJ was interesting, but I felt kind of overshadowed by that Jackson Hole speech upcoming.
Yeah, absolutely. And I'm actually curious what Jay Powell says about the labor revisions, the 818,000 that we saw, and whether or not that even comes up as something that is part of the Fed's thinking at this moment, or if it's just brushed off as yet another data point where we're going to get clarity going into next year. That's going to be something, when we look at futures pictures, kind of an autopilot here, but some outperformance in the FTSE, higher by 0.4%. So I'm curious what that's about. And just sticking with the UK, cable on a tear this morning.
Is that beginning to run out of steam a little bit? I do wonder. I just want to check what the FTSE's done over the last 5 days. It's been a big underperformer. So it's the underperformer of the week. It's down on a 5-day basis by 0.7%. The DAX, for instance, the DAX is up by 1.7%.
So perhaps a little bit of rotation.
So I think a little bit of rotation maybe coming through for the FTSE 100. So a little bit of catch-up. I think it's been hit by the oil story, which has been very weak this week.
True.
2 weeks in there, and I think some of the mining story has also weighed maybe in on the FTSE 100 as well.
Yeah.
Plus, you've had there's a few sort of idiosyncratic stories as well in there too, in terms of some of the other areas that we've been focusing on. But certainly the commodities area has been a weakness for London this week.
It will, and I think it'll come back to kind of just the big individual stock story of the day, which is of course going to be Nestle and the CEO change. Already you're having Deutsche Bank right off the bat saying that they're expecting a drop of low to mid-single digits today. The ADR is already off by about 5% overnight.
And this is a stock that's been down all year.
Yeah.
And I think that's been the pressure on Schneider, maybe to step aside. The question is, does new leadership lead to new targets?
Yeah.
And I think we're going to have to wait until November for the Capital Markets Day, it seems, until we get there. But you would have thought an internal candidate that would be harder to deliver upon, but nevertheless not impossible.
So is this the good news that Nestle needs to boost that stock? Do we actually see that at the open? Does that feed into some of the other Swiss movers that we've got our eye on? We're going to keep you all apprised of that. We're about 5 minutes out from the European market open. Futures pointing higher. Stick with us. This is Bloomberg.
Friday the 23rd, a couple of minutes to go until the start of trading here in Europe. It's the day we've all been waiting for. We're going to get the Powell Jackson Hole speech. We're all on tenterhooks anticipating what he is going to tell us and what it's going to tell us about the future path of Fed rate cuts. We saw a little bit of trepidation in advance of it yesterday. The market kind of rolled over in the States, which is significant. So basically, Europe kind of went out midway through that process. So the takeaway from what you're seeing on the chart here in front of you, this is Europe, that's the United States. There's a little bit of downside maybe to price in from a European perspective at the get-go of trading for equities here in Europe. Let's talk a little bit about, therefore, what the futures look like as we get towards that opening. We will see, I think, probably a little bit of caution. I think probably a light volume session in advance of Powell. Do you really want to take on big positions? The Euro Stocks futures, I feel like I've done this every day this week. It's really becalmed out there. It's really quiet. Take a look at the AVAT function on your Bloomberg. It's basically telling you there's very light volume. Does that pick up a little bit later on today? FTSE futures a little bit more positive. It has been an underperformer this week. We've seen some of the commodity stocks coming under pressure. S&P futures up by a little bit more, a little bit maybe to price in on the upside to take us back to maybe a little bit more flat, but we're up by only 0.3%. It all kind of happens this afternoon. Got some great coverage, I have to say, Kriti, coming up out of Jackson Hole ahead of that speech. After that speech, we'll give you all the analysis of what you need to know.
We absolutely do. You mentioned all the green on the screen there. I'll give you a little bit of red, and that, of course, is in the futures when it comes to the Swiss market. A lot of that seems to be a reaction to that Nestle story, and that's going to be the major stocks to watch, or stock to watch, I should say, that we see going into the open at the opening trade already. That change of leadership, whether or not that's well received by the market, is that positive? Will that kind of plug some of the pain that we've seen in the stock year to date, Guy?
Absolutely. Right, here we go. It is Friday. It is time for the opening trade. Nestle is going to be front and centre. European markets are largely likely to be becalmed. So here it is. The opening trade. Europe gets going this Friday morning, and we're expecting, dare I say it, another quiet one. And there you go. The FTSE 100 is a little bit higher, but not by much. I feel like I've said that fairly often this week. And there we go. The Stoxx 600 up, but not by much. Again, similar kind of narrative. I do have the Swiss market on that board. Brilliant. We will see how it opens, but I suspect it may take a little while to get Nestle open this morning. The bid offer is going to be one to watch out for there. That is the key stock story that we are going to be watching. A change in leadership. Does it lead to a change in targets? The DAX is open. It's up by 0.2%. Kriti, this is exciting stuff that is happening here. I suspect below the surface, actually, there's more action. So why don't I hand things back to you?
Yeah, you're really building up the momentum there, aren't you? It's kind of a rotation trade. It's exactly what we thought it would be in this pre-market story, which is basically that the outperformers of last week or this past couple of days are perhaps the underperformers right now. You are getting opening trades, at least from the Eurostoxx perspective on Nestle here, down a whopping almost 4%. It is your biggest index weight and just showed up, now overtaking some of the pain we're seeing in some of your other sensational six, your ASMLs, your Novo Nordisk, your Unilever. Some of your heavyweights, again, that have been outperforming this week are your underperformers this morning. But again, it's that Nestle story that we are waiting for when it comes to the Swiss market. Again, kind of your biggest weight, not only on Stoxx 600, but on the Swiss market as well, which, by the way, as we start to see those other stocks open, seem to be currently in the green, but we're going to keep you apprised of all of those moves.
Down by 3%. That's a big move on top of what has been already a big move to the downside for Nestle. So the market just doesn't know. In some ways, this is not a surprise that Schneider's stepping aside. It's been a really tough year. This is a company that's facing an input cost problem. It has done for a while. We're watching what's happening with the consumer very carefully. In some ways, this should be a place you want to hide out. You would have thought the staples would be a place you want to go, but actually this is kind of, they've taken it more high end. So is it more exposed actually to the consumer's trade down story than it used to be? Anyway, it's under pressure, and I think we just don't know about the targets yet. And I think we're going to have to wait for the Capital Markets Day in November before we get that information and how big a kitchen sinking operation we are likely to see in some of those targets.
And we should point out that the broader Swiss market is still closed, but the Nestle pricing seems to have come in. We're still waiting for the other Swiss stocks to open off of the back of it. And to your point of getting some research coming out of Vontobel as well, basically saying that, yes, a leadership change was needed. We're expecting some more, or at least they're expecting some more further changes in top management as well. It looks like we're getting that initial pricing coming out of the Swiss market as well. I'm just pulling it up on my screen, and that's where you're seeing the pain. The red on the screen, Nestle, of course, taking the beating off the back of it. UBS is your biggest mover to the upside, but not really stemming much of the pain.
Democatic, the supermarket chain, Joe was just talking about it. It's a stock we don't talk about very often. Down by 13% this morning, I think, at the get-go of trade. So you highlighted
consumer stocks are taking the pain today.
That does seem to be the case. It is certainly where the pain is being felt on a percentage terms. Let me just see if it's where we're still seeing the pain in terms of the points, because I think that's going to be critical. That's definitely Nestle. But as you say, ASML's in there. Novo's in there, which is quite significant. So you did see some of the tech stocks also rolling over yesterday quite significantly. But Democatic's in there too. What I think is interesting is that Unilever is a little softer this morning. What you're not seeing is maybe people rotating out of Nestle into Unilever.
More trading in sympathy than against.
Yeah, precisely. So you're not seeing that kind of portfolio effect. You're maybe seeing concern around the entire sector story.
Well, we're going to let this pricing shake out, and we're going to come back to the story, of course, because in the meantime, as we look forward to the rest of the trading day, all focus is on Jackson Hole, and not just what Jay Powell says, but what many of the ECB speakers say as well. We actually heard from Martin Kazaks on the prospect of rate hikes. Take a listen to what he had to say.
Given the data that we have at the moment, I would be very much open for the discussion of yet another rate cut in September. But we'll see. We still need to see the new forecast. We still need to see August data for inflation. But overall, I would say, even if inflation over the next few months keeps moving sideways, it is consistent with further rate cuts.
ECB's Martin Kazaks there speaking to Bloomberg, and of course not only of the ECB but of the Bank of Latvia governor as well. He's speaking at Jackson Hole. He's talking about the prospect of those further rate cuts. Let's talk about what that looks like in both sides of the Atlantic. Really joining us now this morning, Hani Reda, global multi-asset portfolio manager over at PineBridge. Is 25 basically the base case here out of the Fed in September?
Good morning. Good to be here. I'd say yes, base case is, because the data, they are very data dependent, as they've told us. And the data has been a mixed bag. Some bad in terms of unemployment going up, but some decent numbers in terms of retail sales and yesterday's services PMI. That mixed bag tells them, yes, probably have enough to get going, but no need to really hit the brakes.
So if that's mostly priced in then, it seems to be consensus. 50 seems to be the consensus that would spook the markets. What do the markets do from here?
Yeah, so I think you have to really zoom out. There may be some short-term reaction to this, but it's really critical to keep in mind the sequence of events that play out from here. What the Fed does, whether it's 20 or 50, is not going to change the economic outcomes for the rest of this year or into early next year because of those lead lags. It takes a long time for these things to come through. And so they will only be cushioning what will happen late into next year and beyond. And so for now, the Fed has made its bed, and they're going to have to lie in it.
I hear what you're saying. And yes, from an economic point of view, there is a lag. But from a financial market point of view, there isn't.
Yeah.
And the market will front run, actually, what is going to happen next and try and anticipate it. If we get 50, what is the signal for the market? What is is it things are bad and actually, as a result of which we need to take risk off the table? Is it good? They're cutting 50, they're getting in front of the curve, they're going to save the soft landing, they're going to deliver that soft landing. What is the message from 50 versus 25?
So the market will initially, I think, see a rally in rates on the back of that. Because
on the back of 50 or 25?
On the back of the 50.
Right,
They would see a Fed that is being much more responsive, and they will price in more cuts all the way through into next year.
Yeah.
And so that will be the initial reaction in the rates market. And risk, I think, is going to be much more ambiguous because the market will initially feel some relief in terms of the Fed's on the case and they're here to the rescue. But this is where the economic outcome is really important because that can be an ultimate head fake.
Talk to us more about the economic outcome here because... And I'm quoting again Neil Dutta out of Renaissance Research, basically saying that every recession starts with a slowdown, but not every slowdown is a recession. How do we tell the difference? Where is the sensitivity from a market's perspective? If payrolls are this volatile data set, we're getting these revisions, what is the market most sensitive to in terms of getting that clue?
I think it comes down to actual layoffs at this point. So I think that's why the unemployment rate itself can be a bit misleading because it is a mix of things. It's telling you about the participation rate. It's telling you about layoffs. It's telling you about the pace of job growth. So layoffs become the ultimate litmus test to say that we're now getting into a cost-cutting cycle by companies, and that's going to lead to negative job growth. And that's what will ultimately matter economically.
So what does that number look like then? We're looking at 4.3% unemployment right here. We've had previous presidents brag about 3.9%, so we're not far off. This is a good historical unemployment rate. What's the target then?
Yeah, again, you flip back to the unemployment rate. I want to put you back to the claims side of things. Yeah, and on the claim side, I'd say, look, we've seen that there's a lot of seasonality in this data now. It's very distorted. I'd like to see claims. Well, I don't like to see claims, but I would require to see claims, in the high 200s to begin with, to signal that something has really changed here. Because below that, it is well within noise rather than signal.
If the Fed goes 50, what does it mean for the Bank of England? What does it mean for the ECB?
I think that gives them more room to, if they need to, and so it relieves the pressure of having to move in lockstep with the Fed. But I think their own conditions would be warranting a slowdown as well. A potential acceleration of cuts, because these are open economies. And if that Fed's going at 50, if it's because the U.S. is much weaker, it's likely to spill over into their economies too.
Like at the moment, the U.S. economy, and I'm only taking this from the commentary I read on earnings calls and listening to commentary on Bloomberg when CEOs come on and talk to us, they're all telling me a fairly positive picture right now. They're actually telling me that the economy is doing okay and that things are all right and they don't see a recession coming. We keep asking them the question, do you see a recession? No, don't see a recession coming. What's the danger that if the Fed goes 50, that inflation comes back, that the economy re-accelerates, that actually it ends up with exactly the problem it wants to avoid here?
You're putting your finger on how difficult it is to thread this needle. And that's why our advice to clients is you need to be humble and nimble.
So what are you doing right now?
Humble and nimble. So right now, we've reduced some risk because the data overall, the labor market data, has been loosening up. And the pace of it is starting to become a bit more uncomfortable. So the probabilities, I think, is still possible for us to get through, squeak through without an actual recession. I think that can still be a base case, but the probabilities are shifting. And so moderating some of the risk that you have on makes sense at this point, but then being nimble, because unfortunately, it is going to be very binary. If it's a soft landing, markets are off to the races. If it is a hard landing, you get the opposite outcome. And so be humble in terms of your ability to determine what that outcome is.
Sure.
But be nimble.
Prepare to react.
But moderating that risk, does that actively mean going into hedges, havens, your golds, your dollars, your bonds? Where are you on that?
Yeah, so we were shy about bonds for a long time. But when we got into the high fours and we saw that inflation really seems to be cooperating at this point, bonds became much better as a hedge for a potential slowdown. So that correlation now is working quite beautifully, and I think that will continue. So bonds can definitely help you there. And then we like gold specifically as a geopolitical risk hedge. And that risk is still there. It's still active. We don't think it's going away.
Even
and
at
so
these
you can
levels?
combine it with...
Even at these levels?
Yes, because the overall track for us is lower yields, lower real yields in particular. Real yields have not come down much, and that's going to be an additional support for gold from here.
You talk about it being binary, the risk is binary. It's either going to go one way or the other at this point in time. We're at the watershed. What is the claims number there for? If claims is the pivotal figure, what is the claim number you're looking for to go, we're on this side of the watershed or on with this side of the watershed?
Yeah, so I think you asked me what are you going to watch. I'll give you one number, that's claims, but we will be looking at a totality of a lot of different things. I'm going to sound like Jay Powell here.
You sound like an economist. On one hand, we can do this. He's not an economist.
No, but I think, layoff data as a whole is what you need to look at. That's what I mean. So, initial jobless claims is one of those things. You can look at the JOLTS layoffs. You can look at what you see from the challenger side of things. And so you need to see confirmation that it's happening across the board. That's when you have more confidence that this is now shifting into a non-linear phase. Because that's the other thing to watch. It's not a level that matters. It's also the trajectory. And so far, we've had a gradual, fairly linear loosening up that's happening. Up to now, that is not a reason to flip into hard landing mode and adjust that way. If we start to see that non-linearity come through, that's what I would pay more attention to.
Yeah, and maybe that's the argument around 50. You get to that point and you start seeing that kind of non-linear pickup. That's when maybe a slightly more aggressive rate policy becomes maybe more manageable or doable or necessary. Hani, great to see you. Nice to see you. Thanks for stopping by to see us this Friday ahead of Powell a little bit later on. Ueda, Global Multi-Asset Portfolio Manager, joining us from Pinebridge. There is one stock you want to watch out for on the Call 6 this morning. We've already kind of given you a clue as to what it is. It is Nestle, and as you can see, it is by far and away dominating the narrative when it comes to the key core stocks that we watch here in Europe every morning. But it's interesting that Novo's down 0.5% this morning. It's interesting that ASML is down by nearly 1% as well this morning. Nestle definitely takes it. It's down by nearly 3%. So let's check in on the individual stocks, figure out what is happening here. Joe Easton, back over to you.
So Nestle is the big one, Guy. As you say, it was down around 4% at the open, now down 2.9%. Now, bear in mind, for a company this stable, it is a big decline over the past couple of years. You can really only count a handful of times when it's dropped as much of this, and it is the biggest points decliner on the Stock 600 by some way this morning. Analysts questioning whether now the guidance at the company will be dropped with this new CEO coming in. There is a bit of a split on whether that will happen or not. We'll have to wait and see. There has been a conference call going on. We've been getting headlines on that. We'll wait to see how that progresses, but a pretty decent decline on that stock for Nestle in Switzerland at the moment. Then in terms of Getinge over in Stockholm, medical transportation, a pretty punchy premium on that. About 11 times sales is the multiple on that deal that they're doing, coming down very slightly, around 1.5% at the moment, not getting a really positive reaction on that deal. But the big dropper in Poland that you broke earlier is, of course, Dino Polska over on the Warsaw market, down 13%, a massive plunge. It's the first time they've reported a decline in profit and sales since they went public 8 years ago in Poland, according to analysts today. So that is a heavy decliner for the Polish supermarket. Not all negative in earnings, though. We've got ALK at Bello. This is in allergy vaccines over in Denmark, one of the many Danish pharmaceutical companies, gaining around 9% following some strong numbers out of them this morning. We've got a little bit of a surprise one coming from Direct Line today, warning that they actually overstated some of their solvency ratios in their last earnings report. Unexpected from them. We are seeing a bit of weakness in that stock. Not a very positive one for them today. That is, of course, the motor and home insurer in the UK. Staying in the UK, quick look at energy stocks. Energy bills going up around 10%. We did not want to hear that, but that is the news from Ofgem, and analysts actually warning that there could be another increase as soon as January. So we're keeping an eye on the suppliers of UK energy, Centrica, SSE and E.ON over in Germany, but not a big reaction, potentially all priced in. We know this is the situation at the moment. One morning call to bring you, and a pretty punchy decline. We've got Melrose Industries double downgraded from buy to sell at UBS. They say the market is overstating the value of the aerospace company's portfolio. Pretty remarkable. UBS reckons it's worth around half of what consensus has it as at the moment. So they are cutting that stock. They've been a long-term buyer, and Melrose down 4.8% in London this morning.
All right, Joe Easton, we thank you so much for bringing us those stocks to watch. Coming up on the program, we're diving into where he started. After 8 years at the helm, Nestle CEO is the latest consumer goods boss to be shown the door. We're going to dive into his replacement and the stock market reaction next. Stick with us. This is Bloomberg.
Call it 20 minutes into the opening trade. This is what the picture looks like first thing this morning. Cautious start. A little bit more positive maybe than it's been over the last few days, but we are anticipating a slowish countdown to the J. Powell speech, which is at 3 p.m. UK time a little bit later on. The market's going to be cautious into that. However, that said, there are some single stocks which are really significant this morning. There's one out of Poland, but there's definitely one out of Vevey, Switzerland. So let's take you down to the shores of Lake Geneva and figure out what is happening there. Schneider is out. Freixe is in. You've got a new CEO coming in. I say in, he is an existing candidate that has come from within the company, and therefore there are questions about whether or not existing targets are continued or whether or not ultimately they get changed. The signalling seems to be, at this point, Kriti, that maybe actually we wait until the Capital Markets Day and then maybe we do see some changes. And the market's reacting quite violently to this.
It is. And I'm curious how much of that is because they're maybe not. Is it that they're expecting continued pain? Are they expecting that he's a company veteran? Is it, are we expecting that this has been an ongoing story for a year?
Do things change as a result of this? Because at the moment, the trajectory this year has not been a good one.
Yeah, and it's one that the markets aren't diving into very well. Let's get another voice on this. Bloomberg's Dasha Afanasieva, our consumer goods reporter, is, of course, following this story. Dasha, walk us through this. We're seeing red on the screen. Are the markets just disappointed by the pick? What's the thinking here?
I do think that the markets are disappointed by the pick, although it is interesting. It's an internal candidate, and I think the feeling was they couldn't go for an external one because Schneider was external, came from a healthcare company, and actually his healthcare bets within Nestle really haven't paid off. So they've gone for someone who is more in the image of the CEO before, Paul Bulka, who is now chairman, including a sort of a background in Latin America and a fascination with that region. I think probably the markets are disappointed because of the uncertainty of what happens to targets now, what's the strategy, and the management wouldn't be drawn on that. They just said you've got to wait for the Capital Markets Day, which to me really sounded like there will be shifts because, you know, the guy's been on the executive committee for 16 years. He knows whether the targets are achievable or not. He knows by now, so why not? Just or has a sense for it, even if they haven't, you know, if they've done the formal analysis and decided that they were being cut, then they'd have to announce it.
So what is the market, why is the market down? This is what we're trying to understand this morning. Is it an anticipation that we do get cuts, and those cuts could be quite significant? But as you say, he's an internal candidate, so why would he change the cuts? I'm genuinely confused here as to why the stock is down. The commentary on the call this morning seemed to suggest, as you say, the Capital Markets Day is going to be the moment that happens. Is that I can't work out if that's a good thing or a bad thing. A realistic assessment of where this company is right now is one thing. A change in strategy is completely different. I'm trying to understand the difference here.
I don't think there'll be a change in strategy, but I think there'll be a change in targets, probably. And that's what, reading between the lines, it sounds like it is coming. And I think that's the main, on the operating margin target, which, you know, they're trying to grow. And of course, there's this balance between reinvesting in brands and having the money to do that, whilst also keeping profitability high, which is particularly important when you're struggling to grow the top line. And I think it's that balance that they're going to look for. And like every CEO in the consumer space says, we're going to really focus on cost, and we're going to then reinvest in our brands. But in practice, how that works, especially with someone who's been supposedly helping Nestle do that in his current role, it's all that uncertainty that the company wouldn't really be drawn on. And I think I was also surprised. I actually think, this isn't a situation where someone was like, on their way out for months and then eventually the company gave in. I think despite there having been 4 quarters of missed guidance, there was still some goodwill amongst some analysts and investors, and a lot of respect for Schneider. So I think that also adds to the uncertainty. And if you contrast it with when the Starbucks chief executive was ousted just last week, and there was a massively positive share price reaction, Schneider has more of a track record.
Dasha, thanks for the update. Really appreciate it. A big story, certainly having a big impact here in terms of the European corporate story this morning. Dasha Afanasya joining us on the Nestle story. We're going to have to wait until November, it seems.
Yeah, I mean, but the stock is down 2%. I'm curious when we do what that new kind of commentary will look like. We're still waiting for some of the analysts who are saying, well, look, this is a man who can actually continue to rebuild the culture as well as perhaps fix some of the pricing. Coming up, we're going to switch gears here. Vice President Kamala Harris formally accepting the Democratic presidential nomination. As we head to break, take a listen to a few of the highlights from the DNC this week.
To serve as your president, I love the job, but I love my country more.
We refused to give up on America. Millions marched, many ran for office. We kept our eyes on the future. Well, my friends, the future is here.
Here's a 78-year-old billionaire who has not stopped whining about his problems since he rode down his golden escalator 9 years ago.
I want to know, who's going to tell him that the job he's currently seeking might just be one of those black jobs?
More than anything else, let us choose freedom. Why? Because that's the best of America. We're all Americans, and together, let's all choose Kamala Harris.
It's the 4th quarter. We're down a field goal, but we're on offense and we've got the ball. We're driving down the field. And boy, do we have the right team.
I accept your nomination to be President of the United States of America. While he intends to enact what in effect is a national sales tax, call it a Trump tax, that would raise prices on middle-class families by almost $4,000 a year.
And remember, what I'm going to do is something that nobody has ever even thought about doing. No tax on tips. For all of you waitresses, for all of you caddies at Doral.
We will create what I call an opportunity economy where everyone has the chance to compete and a chance to succeed.
Are you better off now with Harris and Biden than you were with a person named President Donald J. Trump? Do you know him? He's a nice gentleman. Nice gentleman.
Vice President Kamala Harris and Republican nominee Donald Trump speaking in the last 24 hours, talking about what some of those policies might look like. A lot of it being focused on that tax policy, perhaps one that the financial community focuses on how to fund that looming deficit. Of course, that negotiation happening in January. There's plenty more on the docket, though, and a lot of that for our international audience has to do with foreign policy, where we're still trying to put the pieces together on what a Trump 2.0 or a Kamala Harris presidency may actually look like for the rest of the world. Joining us now to discuss that very topic, Roberta Haar, professor of foreign policy analysis and transatlantic relations over at Maastricht University, joins us this morning. A pleasure to have you on the program. Let's start there. It feels like with Kamala Harris's formal acceptance of the Democratic nomination, there's still a lot of concerns about what she might actually change when it comes to foreign policy. Your take, is this just the status quo?
Well, first of all, thank you for having me on your show. I do think that it seems that Kamala Harris will very much follow in the footsteps of the Biden administration, which has, for Europeans, feelings of, I would say, both darkness and light. Certainly the light has to do with the very strong statements she made about leading, making sure the United States will lead a global order, will support her allies, will support Ukraine. But I think the darkness has more to do with the economic policies that the Biden administration has enacted that have not always set well with Brussels.
Well, give us some of those examples. I mean, I think there's been a conversation as well that U.S.-UK relations have been strained as well. There's been a tariff conversation that's been looming, especially in the steel story, that's been put on pause. What does that look like in a Kamala Harris presidency?
Well, I was thinking more about the arguments they have for technology, that she will continue to make sure that the U.S. is competitive economically, that they will continue to invest in production of U.S. advanced technologies like semiconductors, that they'll resist regulations that are advocated by the European Union. I think those are the things that will be more uneasy for Europeans.
So, Professor, the reshoring continues, the CHIP Act continues, the Inflation Reduction Act, that kind of industrial policy continues. How does Europe respond to that?
Yes, I think, yes, indeed, those protectionist policies will very much continue. How does Europe respond to that? Well, I think that they've had difficulties in responding to that. I think they probably will also have their own protectionist measures. I think that Macron has also said that this is sort of rebooting or re-triggering how multilateralism will work in the future. No, I think that Europe will have difficulty in responding to these measures.
So in terms of what changes, what does change? Is this Bidenomics 2.0? What does Bidenomics look like in terms of the improvements? Because Bidenomics has really caught Europe on the hop. We've been happy over here that we have seen a more manageable relationship, but we found it very tricky to deal with the industrial policy that has been delivered at the center of Bidenomics. What does the transition from Bidenomics to Harrisomics look like in terms of the way that this story is going to progress? Are there going to be significant changes? Is Europe going to find it easier or harder? Where are the key areas that I should be looking?
Well, of course, we don't know yet. We don't know, and we haven't heard a lot of policy specifics from Kamala Harris. But we do know maybe a positive thing for Europe is that she has been very critical of the trade war, especially how Trump started the trade war. And this, of course, affects European exports as well. So this could mean that she changes aspects of the trade war while still doing very much for investments in the U.S. sector in emerging technologies.
Well, Roberta, let's talk about that trade war a little bit. I mean, I know we're talking between the U.S. and Europe, but I'm curious, as the one piece of consistency between President Trump and President Biden has been being a tough president on China, it's likely to continue again under Kamala Harris if she were to be elected, certainly under President Trump if he were to be elected. What is Europe's role in that dynamic? The last time we saw this under the Trump era, it felt like Europe was playing a more diplomatic role, getting caught in the crossfire. But now I'm curious, does that kind of sway Europe more to the U.S. side?
Well, certainly the rivalry with China has been something that Europe has had difficulty in dealing with. First of all, they did things at the beginning of the Biden administration that the Biden administration wasn't so pleased about, but they have realized that and has in the meantime viewed China as also a strategic rival. And these things are more in line with U.S. thinking. Of course, if the West wants to have any strong response to China and China that we want to deal with better in the future, it has to work together. And I think that we'll see how Harris will work together with Europeans. Sorry, I'm feeling a bit nervous now.
Don't be nervous, believe you me. Roberta, I read a piece in the FT flagging the fact that Philip Gordon, who came out of the Obama administration, backed Obama early, has been a key person that Harris has turned to in terms of foreign policy advice. You've got your ear to the ground. Who are people talking about in terms of who she is listening to? Who should we listen to because she's listening to them?
Well, actually, obviously, I'm not in Washington, so I don't know exactly the answer to that. But I am assuming that many of the administration officials who are in the current administration will also. These are the experts in the Democratic Party dealing with foreign policy, dealing with China. I'm assuming that many of them will also stay within her administration. People like Kurt Campbell, Michelle Flournoy, Rush Doshi, who's now left the administration but still working at the outside in think tanks. I think that many of these same people who have been advising Biden on foreign policy and how to deal with China and really viewing China as the strategic rival of the future, I think they will also still be in her administration.
Roberta, we're going to leave it there. Thank you very much indeed. We greatly appreciate it. Fantastic. No need to be nervous. Roberta
Thank you very much.
Professor of Foreign Policy Analysis. A great pleasure. Joining us from Maastricht University in the southern Netherlands. OK, let's talk a little bit about what is happening. She mentioned Emmanuel Macron, so let's talk a little bit about what is happening in France. France's president will begin negotiations with party leaders today. This is the starting of the process. This is after the hiatus of the Olympics. They're trying to figure out who's going to be the prime minister. Remember, Macron effectively lost control of Parliament. That snap election which caused so much volatility. The French leader is going to start talks at the Elysée today. I think the main focus is going to be on the conversation around the new Popular Front, which won the largest number of seats, still short of a majority. But most of the major parties are going to be involved in this process. And this is critical, Kriti, because we've just had a conversation about what is happening in the States. If Harris were to win, what that policy would look like, and particularly on the industrial policy front, what that would look like. How Europe was responding is really difficult to determine at the moment. Macron's all at sea. We don't know what's going to happen next in France. Germany's in a similar kind of situation at the moment. The coalition is fragile. It's really difficult to understand where the momentum comes from within Europe to compete with even with a Harris camp, let alone what happens with the Trump camp. I wonder whether a Trump win would actually bring Europe together and maybe give a little bit more of a go forward in a sort of crisis situation. I mean,
it would in a defense perspective. We're already seeing that when it comes to NATO, when it comes to the conversations happening in Brussels, where we are actually seeing a little bit more I think unity is the wrong word, but a little bit more kind of have their act together relative to France and Germany. I think a great example of that is just what happened during the Olympics, and that even with some of the security threats, some of the security situations, one of the concerns in France was that the government isn't put together enough to be able to quickly react to something like that. I also think it's important to talk about what those deficit conversations look like. September 20th, France has to put forward what their budget looks like to the EU and comply with some rules. And that's going to be tough, and the markets are going to react.
How long is this process of government forming going to last? Can we get a candidate? Could we get a candidate? There's a number of names kind of floating around the halls of power in France right now that would pass a vote of no confidence. Such a fragmented parliament. Can somebody gain enough votes to pass a vote of no confidence and therefore continue in role? Rather than seeing another bout of volatility. Again, is this all just a prelude, though, to another French election? Because it is so fragmented as well. We're just in that period now. We're just going to have to wait for another French election to provide clarity. And does it provide clarity? And
in the meantime, what does Marine Le Pen doing in the background.
Exactly.
It kind of feels like doing push-ups. She's already feels like cleaning up her party a little bit in terms of some of the rhetoric that's coming out of it.
She's getting ready for that election.
Absolutely. And especially because, and we remember this, that in the initial kind of run-up, in the initial snap elections, she was doing a lot to court the business community and to court the fact that the right is just as competent as the left and the center to make those deficit negotiations viable for the rest of the market.
Is she waiting for chaos on the left in order to make her case in that potentially quite soon to come election a year out? Like, is she basically waiting for? Does she want a year of almost chaos in France to make her case?
I think
that's not good for the markets.
No, it's not. And I was going to say we're already looking at 72 basis points on that spread between the French and German debt. Some folks saying go as high as 90. If it goes to even as high as 100, you have a problem on your hands. Absolutely.
But we're not. I think the sense seems to be that we're not going to gain any clarity, at least in the near term, as to kind of what that looks like. And this is a key point of power at the heart of Europe. Anyway, we're going to continue to watch that. We'll bring you some pictures. We'll get our Paris bureau chief on in the next hour. We'll keep you updated on what is happening here as those talks kind of start, kind of circa 9 o'clock here in London. We'll get you some live pictures as well, people going in and out of the Elysee a little bit later on. We're also going to bring you a lot of live pictures from Jackson Hole a little bit later on. We are, of course, waiting for Powell, investors bracing for the Fed chair. He's going to be speaking later at Jackson Hole. We've got some great coverage lined up, some pre-market, some post-market game analysis coming from the team at Jackson Hole. A special coming up here on Bloomberg Television. Looking forward to that coverage. Anyway, we'll talk more about that next as well. This is Bloomberg.
Liftoff in a flying taxi without a pilot. This bubble-like automated vehicle is made by EHang Holdings. It's vying to become the world's first uncrewed commercial flying taxi this year. While flagging a cab isn't going away anytime soon, the potential market for these next-generation rides could be massive. According to Morgan Stanley, it's a market that could be worth $1 trillion by 2040. And while questions remain over the sector, if that prediction is anywhere near close, in not much more than a decade, the world could be spending more on flying car trips than it currently does on conventional air travel.
Okay, so that's a flying taxi. That's one thing. A
Would
flying
you do
taxi. So I would, but I don't think a lot of people would. The AI. So basically, and we put a reporter in one of these things. You go up. There's no pilot. You're just sitting in this thing. It takes off. It goes wherever it's going to go. It lands, but you have no control. Like, this is. We talk about sort of Elon Musk wanting to get Teslas to be robocabs. Like, this is a flying version of a robocab. Do you want to? Is everybody ready for this? In some ways, there are kind of maybe less things to bump into, but.
There's a lot of like bird jokes to be made there, but I gotta say I've got my feet on the ground. I'm a little scared of this.
So you wouldn't?
I would not. I don't think.
If there was a pilot, would that make a difference?
Yes, because I also wouldn't do autonomous cars. Like that to me is also a fear. I'm not there yet. And I think I share the public sentiment, by the way, when it comes to things like autonomous driving. There's a lot of concern around that. It hasn't been fully regulated. This is a longer conversation, but we should probably stick to the cars topic.
Well, let's transition to the cars topic and talk a little bit about what's happening with BMW and Tesla. BMW is now ahead of Tesla in terms of leading the European electric vehicle sales story. It has a lot more cars, so Tesla's only got a relatively limited lineup in terms of the vehicles. As you can see there, there's lots of BMWs out there. So maybe this is just a kind of aggregate story that we need to talk about. Craig Trudell joins us now for more. Our cars are. Morning. Is that, how indicative, how useful a kind of indication is it that BMW is now doing better than Tesla?
I think it's a fascinating story because just a few years ago, there was really a concern about whether a sort of, one-foot-in strategy for BMW was ever possibly going to work for them. A lot of manufacturers were putting more emphasis on, dedicated platforms, purpose-built for electric vehicles, whereas BMW was in this camp of flexibility where they would take combustion engine car platforms and build them as electric versions, plug-in hybrid versions, or just, your typical gas versions. And a lot of people told the company this is the wrong way. Interestingly, they're going to, be moving off of the approach that they've taken this new class platform that they're bringing to market starting next year. So, they're really, now we're seeing momentum in terms of their ability to scale up their EV business. And they're going to have this added benefit of having, spent time, effort, and not necessarily rushed in with full EVs, really, done so in a concerted way. And can they make the transition, starting next year in a smoother way than we've seen a lot of their competitors? Yeah. They tried to sort of, jump with both feet, and they really have not succeeded. So, it's very interesting to me that they've been able to pull this off, even with that caveat that, yeah, they have a much broader lineup than Tesla has.
Can you walk us through the pricing of all this? It feels like in the States, EVs are more expensive to make. They're more expensive to market. There's a whole supply chain story of how they get access to the chips involved, not to mention the raw materials and, of course, the labor as well. But it feels like some of those challenges aren't as challenging in this part of the world, which would affect the pricing. So why is this only happening now and not earlier?
Yeah, I think, BMW gets a lot of credit for being a very well-managed company that, doesn't necessarily tell its story that well, but sort of, under the surface is really, one of the companies that you don't see make big mistakes. And so you've seen other manufacturers, again, make a lot of noise about their electrification strategy, not be able to execute. BMW is sort of known for being able to execute. And so I think they really did try to make a big push with the i3. We're now talking roughly a decade ago. Yeah. That didn't go so well. And I think they learned a lot from that process, recalibrated, decided to make this approach of we're going to give everybody a little bit of everything powertrain-wise. And I think it shouldn't be overlooked, too, that they do have close ties with some Chinese companies that have surely helped here. Yeah. CATL being one of their big battery suppliers. We're seeing, in terms of the progress, we're seeing bringing battery costs down, which thereby allows for making EVs more affordable. BMW is able to tap into that by having, been a close customer of CATL's for years now.
Well, certainly something we're going to be keeping an eye on, and really what the future of Tesla looks like. It's a fascinating one. Of course, how Tesla shares trade when I think the pre-market opens in just about 9 minutes or so. So we're going to keep an eye on that. In the meantime, let's go back to our top story here. Of course, all eyes are on what happens in Jackson Hole. Jerome Powell may shed light on the Fed's rate path and highly anticipated speech out of Wyoming later today. The biggest question remains, will the central bank cut at its September meeting? Bloomberg's Michael McKee has the preview.
All Wall Street wants to know, how far will he go? Investors would love a rate cut pledge from Chairman Powell. That's not likely. He's also unlikely to say how far the Fed will cut or what their next steps will be. Instead, expect acknowledgement that the Fed is close to changing rates as long as the incoming financial data meets forecasts. He still has to get some of his colleagues on board.
This mandate on the inflation side is really important. I think we seem to be getting some really good movement that direction. But before we act, at least before I act or recommend acting, I think we need to see a little bit more.
Kansas City Schmidt can't define how much a little bit might be. But for Wall Street, Powell just raising the subject may be enough. There's also interest in how much he might talk about the Fed's framework review, which the central bank begins to undertake this fall. The transmission of monetary policy is the topic of this year's symposium. Michael McKee, Bloomberg, Jackson Hole, Wyoming.
All right, so what does that transmission mechanism actually look like, and how do the markets price it in? Let's ask Bloomberg's managing editor for FX rates for the U.S. and EMEA. Rachel Evans joins us around the table here. So September seems to be telegraphed quite clearly, 25 basis points. It's in the books. What happens after that? Do we see any signs of what the game changer might be for November, December?
Yeah, I mean, the market at the moment is seeing roughly 100 basis points of cuts through year end, 95 at the moment this morning. So that implies that we're going to see them cut every meeting between now and December, and one of those cuts will be supersized, will be with 50 basis points. And then after that, through about this time next year, we're expecting to see another percentage point of cuts. So the market is pretty aggressive. They're seeing 2 percentage points of cuts between now and a year's time. That is a lot. So when we're going into Jackson Hole and thinking about what Powell can say, I think the market is going to be very, very focused on how aggressive Powell seems like he wants to combat any weakness in the labour market. He's made it very clear that jobs, labour is going to be a key thing that they look at for deciding when to cut and how aggressively to cut, having kind of broken the back of inflation already. So I think the market is going to be looking to see just how fighting he comes out, what sort of language he is using about how he sees the state of the labour market. Because to be clear, we've had some very conflicting pictures of the health of that market.
What I can't figure out is how investors respond to a 50 basis point cut were we to see one. And the market pricing kind of signals that we are going to get one, as you say. Is it the Fed knows something that we don't? The economy is going downhill pretty fast. They need to front load. They need to be aggressive. That's bad. So that's bad for risk assets. Or is it actually they're just being careful? They want to make sure that actually any tick up in the labour markets and stress that we're seeing, they can handle. They're going to manage it. It's non-linear generally, that pickup in the labour market where you see unemployment rising. We're going to get in front of that. We're going to deal with that. What are you hearing? What are people saying to you about kind of were we to see a dovish Powell today? How does the market respond to that?
I think if you see a dovish Powell, I think you get a huge rally reignited in the bond market for starters.
Yep.
I mean, we saw just how sensitive that market was, which is obviously very, very price conscious of exactly what happens in rates back in early August, right? We saw some data come in that was starting to question the health of the US economy and just how quickly bonds rallied off the back of that and how quickly stocks
But isn't the bond market already pricing? You're saying it's 100 basis points. Between,
yeah.
And that sounds like he needs to be dovish to justify that pricing.
Yeah, but I don't think that is necessarily in the actual treasuries market itself at the moment.
Okay. Yeah.
So I think that's where you'll see kind of that rally. We saw things kind of really yields starting to inch back up after kind of like falling to their nadir in early August. I think that is where you're going to see that kind of articulated again if we do see Powell coming through and being dovish. I think, though, the risk is probably on the other side. I think probably Powell is going to be more hawkish than perhaps markets think. They don't want to provoke panic. They want to be seen to be on top of things and moving towards cuts. But I don't think they want to stress that things are deteriorating, give the impression that they are behind the curve. So I think the risk at Jackson Hole is that Powell actually comes. Well, yeah, Powell comes out and says, you know what, things are okay. We'll cut, we're going to cut, but it's not like everything's falling off a cliff immediately.
Okay.
Rachel, I'm going to put you on the spot here, 30 seconds. Dollar weakness. It feels like that's really a function of that kind of dovish expectation out of Powell. You're seeing 131 on cable, 111 on euro. When does that snap back?
Yeah, no, I think that the question mark about exactly how far it can snap back remains. I think the dollar weakness thing, that is what you will also see, Guy. If we do see more dovish Powell, dollar could fall out of bed. But at the moment, it's been trending down very gradually. Yes, you're seeing those highs in pound and euro, but I think that would be the kind of like sort of pain point potentially for markets if we do see a far more dovish Powell.
It's going to be an interesting afternoon.
Yeah.
I'm definitely going to be paying attention. Rachel, thank you very much indeed. Bloomberg's managing editor for FX and Rates, US and EMEA. Rachel Evans, thank you very much indeed. Stick with Bloomberg. I'm going to be tuning in. Believe you me, we've got some great coverage coming up. Fed Chair Jerome Powell's speech, Jackson Hole, at the Economic Symposium that is taking place there today. We've got a special coming up. We've got some great guests as well. Atlanta, Philadelphia, Chicago Fed president's going to be joining us. Esther George going to be joining us, formerly of the Kansas City Fed, of course. The surveillance team are there. They've got some great coverage. It starts at 2 p.m. UK time. Midway through that, we are going to get the speech. We'll cover all of that. As the countdown continues, I'll take you through the pulse. That's the next hour. This is Bloomberg.